Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
You are listening to the financialsurvivalnetwork.com. I'm Kerry Lutz on 1230 WBZT. You've been asking for quite a while. In fact, I've been getting emails demanding. So he's back, Martin Armstrong, giving us the latest on what is actually going on, because I got to tell you, I sure as heck don't know, don't understand. By all accounts, the United States economy should have collapsed years ago, but there's a reason why it hasn't. And the reason is quite simple. Everybody else is in such rotten shape that they're sending all their money here. Isn't that right, Martin?
You hit the nail on the head.
When every place else in the world, even China, is looking so desperate, there's a beacon of light. It used to be freedom that was shining in the U.S. Now it's all that money that they're sending here, the safe harbor of the world, which enables the government here to get away with almost anything because it's forestalled the collapse. I think I've got it right.
Pretty much. I mean, the main issue is that I know a lot of people have been predicting, hyperinflation and the dollar is going to crash and stuff like that. All they ever do is look at the domestic stuff. You really have to, open, the windows and take a look around the neighborhood here. What do you have as an alternative? The yen? No. Euro? They never created a national debt. So to them, and the reason all the banks are failing over there or in huge problems is because the reserves they had to be politically correct and take bonds from every country. So that would be as if, Citibank was backed by Louisiana bonds, California, Texas. You have to do a tremendous amount of investigation to see who's still standing. At least here, our reserves are only federal government bonds, period. So Europe is really in serious trouble. The taxation is huge. Even if you look at things like a Starbucks, which is $5 over here, you'll pay $9 in Switzerland, and the costs are much, much higher for everything across the board. So there's no real economic growth. Europe is negative, and we're looking at unemployment among the youth at over 60% over there.
Amazing.
They have no future whatsoever for the next generation. And it's bad. This is effectively the second shoe that has to fall. The first one was communism, where a government basically said, we own everything and we're controlling it. Here, they say, okay, fine, you own it, but we control it. And it's not much different. Whenever you have centralized planning like this, nothing works. If you look at, why do we have the SEC? Oh, it was to prevent crashes. Have they ever prevented anything?
I think they stopped Bernie Madoff from getting caught for a while.
Yeah, for a long time. You take the NSA, and they're collecting every phone call in the country and email and all this stuff. Oh, it's to protect us. You had two guys with cell phones in Boston. They couldn't pick that up.
Yeah, they missed that one, huh?
So, and what are they actually doing? They're really out looking for people with money. That's what's going on. And
yeah, the gang that couldn't shoot straight.
They're basically helping. All governments are now, and the G20 has now conceded that the number one issue is taxes and tax avoidance. So they created, money laundering laws. Okay, money laundering was somebody who was in the drug business, you took the money and you tried to get it into the system. Now what they call money laundering, if you put like 10, $20 gold pieces in your pocket and you're trying to get them out of the country to put them someplace else. That's now money laundering. So now they can confiscate that and give you 25 years in jail.
Nice.
So everything is money laundering as far as trying to hide any money from the government now. So it's interesting, their interpretations.
Yeah.
But that's what it's all about. They're broke. They're dead broke. The system doesn't function. At the state and local level, what you see in Detroit is just the tip of the iceberg. But this is deflationary. It's not hyperinflation.
Mm-hmm.
Hyperinflation occurs in a revolutionary-type government. For example, it occurred for the revolution in France, Germany. But they failed to tell you Germany in 1918 was a communist revolution. They invited the communists from Russia to come in and take Germany. So there was no money in the banks. Nobody would put up any money, and everybody fled. France, they all fled to Geneva.
Mm-hmm.
And United States, we went through a hyperinflation in continental, in the continental currency and the state currencies. And the Constitution, they said, they promised to make good on all the debts from the Continental Congress. They never did.
Mm-hmm.
So, hyperinflation is usually a government that has nothing, and people have hoarded all the money. It's not in banks or anything like that. And what we have is the traditional type of economy that collapses, and that is always goes, unfortunately, through deflation.
Right.
The deflationary side is the fact that they keep raising taxes and hunting everybody down they possibly can, so that what happens is that the economy begins to collapse.
Mm-hmm.
So the global economy is shrinking sharply. No American can possibly hop on a plane and go to Germany and start a business today. Americans can't even open an account in Europe.
Mm-hmm.
Because the assumption is, if an American has an account in Europe, it's the high taxes. We have destroyed the American ability to expand our economy globally. The only people that can now are the multinational corporations. That's it. So the future, if we continue this way, there'll be no small businesses, and they're the ones that create the jobs. We'll be at 60% unemployment. So, the whole system is fatally flawed. And we're getting to that point of real serious issues. You take a small municipality. It had 10 cops. 5 retire. They still have to pay the 5. Now they have to hire 5 more. So the cost of local government is going up exponentially. This is why Detroit's failing. Philadelphia school system, they got the same problems. They just had to lay off a whole bunch of teachers because there's no money to pay these people. Detroit, they had to tell the pensioners, you're going to have to take a cut. We can't pay you the pensions. So all these people that have worked for government thinking, you'll be taken care of, and it's not there.
Yeah, good luck on that one. Ain't going to happen.
What becomes deflation is that what people don't realize, the state and local governments cannot print money. All they can do is raise taxes.
And they reach a limit. Like Detroit, they can't even collect the taxes that they're raising.
Right. So the feds are not going to bail them out. And I can tell you that the Federal Reserve has been going around and effectively Glass-Steagall is being re-implemented, but by default.
Right.
They have been informing all the big banks that they are not going to cover any issue as far as losses in proprietary trading again, which is why J.P. Morgan is now withdrawing from commodities.
Mm-hmm.
And all they will cover at this point in time is going to be the outstanding loans and deposits. That's it.
So,
traditional banking.
So is J.P. Morgan going to get out of the vault business, out of the gold business too? They said
Absolutely.
They're not, but they said they weren't. So why did they say they're not going to get out of the gold and silver business when they are effectively going to do it?
they largely have no choice but to exit a lot of these things. The gold and silver that they do hold a lot. It's not really for proprietary trading. It is they do lend a lot, and most of that has been with corporate stuff. And that has been a traditional business that's been around for a long time, leasing gold, etc., because it is a dead asset. It doesn't earn interest. So if you do have a lot of gold sitting in a vault, well, it's going to cost you money just to leave it there. So those that do have it do tend to lease it out.
Right.
So, I mean, that's fairly... It has been around, really since the 80s. So I don't see that really as too much of an issue.
Yeah.
The major thing is that what we're looking at is on the global side. You have Japan in trouble. Japan and China is now starting to turn down. Europe is an absolute a nightmare over there.
Right.
And the capital has no other choice but to go into the dollar. So what we're looking at probably for the next 2 years after the fall of this year is you're probably going to see the stock market go up even maybe about double.
Really?
And then you'll get that isolated peak like, Tokyo 1989 or 1929. You need a straight up type move. If you look at what's on TV right now, everybody's saying, "Oh, market's overdone. This is it. We're in crash mode." Nobody's up there saying, "Hey, this thing's really going to take off." They're all bearish as hell out there.
Well, stocks climb on a wall of worry, right? That old cliche.
Yeah. So they don't understand it. They're saying, "Oh, well, gee, bank stocks should be going down because people are applying for less mortgages, so they'll make less." Sounds nice, but that's only one fundamental.
Right.
They're not looking at it internationally, and take a look at what's happening on a global scale is important.
And we're just going to take a short break right now. Kerry Lutz on the Financial Survival Network with Martin Armstrong, 1230 WBZT. Hi, it's Kerry Lutz. I recently decided to move my retirement account into physical precious metals to hedge against the coming times. If you want to move an existing retirement account into physical precious metals that you can hold in your hand, tax-free, there's no company that can do it more quickly and efficiently than Regal Assets. It took them just 24 hours to open my new IRA account, and all I had to do was fill out one simple form. The best part is that Regal Assets does all the work for you. They cover the setup and administrative costs for 2013. If you're interested in making the same move I did, call 855-678-6620, 855-678-6620. That's 855-678-6620, or visit them at regalassets.com. You'll be glad you did, and tell them Kerry sent you. And we are back with Martin Armstrong on the Financial Survival Network. So, Martin, you say this market is going to double in the next couple of years, huh?
We have the risk of the stock market doing what we call a phase transition. Our major resistance has been at 16,000.
Right.
And this market has been just inching up, crawling like a pointer dog, trying not to scare a duck. And it's but there's no place left for capital. You have interest rates are going to start moving higher. And so you don't really want to be in the bond market. You have pension funds in this country that are virtually on the brink of insolvency. They haven't been able to earn enough money to even cover what is owed. So they're being forced into higher yielding equities that are paying at least 5 to 7%.
Right.
You have banks not willing to give people any money. They want 4% for a 3-year car loan, but ask them how much they'll pay you for 3 years. money on a CD, and then you'll be lucky if you get 0.5%.
So really, this is it.
That's all you have right now. And there's a tremendous amount of capital on a global scale, and it's got to go someplace. And Europe has got no future at all, and so you're starting to see capital move over here. You got the same thing happening with Japan. Europeans are buying up condos at huge prices in New York City.
Mm-hmm.
And just to get money out of Europe.
What about real estate in the U.S.? Do you think that's going to appreciate also?
Yes, as far as the areas where foreign capital comes in.
Mm-hmm. So Miami, New York, L.A.
Yeah, the high flying areas will continue to do well, and you're looking at more capital coming in for that type of area.
Yeah.
It's also with real estate, what they're doing with the banking system. Everybody's hunting capital everywhere.
Mm-hmm.
So the smart money realizes you can't even leave money in the bank anymore.
Right.
So the best way to get it out of the banking system, they go into real estate.
Mm-hmm.
And it's real estate and bonds. You can use as well as equities.
Mm-hmm.
It's now gold they're killing it.
Mm-hmm.
As far as American can't store gold in Europe anymore.
Right.
And India has come out with, practically doubling their tariffs in June to stop people from buying gold.
It's not working too well, though.
And it's just, it makes it very difficult. And you can't take it out of the country where so the big money really is largely going into equities. First, I would say. Second, very, very short-term paper.
Mm-hmm.
And third, real estate, but the high flyers.
Right. So
that's pretty much what you're looking at. You're also on the pension side. We have a lot of problems in pensions. And one of the things that I do get from Capitol Hill is that I think their dream plan is to then take over all government pensions and state pensions. That may be the next real issue coming off of starting in 2016. The way they look at it, if they can take all the pensions in the country, that would be $17 trillion, and therefore they got a $15 trillion national debt, and they're covered.
So all the private pensions you're talking about, your IRAs and all that good stuff.
Oh, it's for your benefit.
I feel so much better knowing that the government is out there helping me, don't you? Doesn't that make you feel better?
Yeah,
they helped you so much in the past.
You might not be able to tell if you're going to get another Madoff. So,
well, they've been so good to you, Martin, right? They've really helped you.
Yeah.
They've been good to you.
And I would be, very cautious about some of the stuff. Well, by the time we get towards the end of this cycle, which will be around October or so of 15, that's when I see the metals really, starting to take off again.
Yeah.
Probably from there going off into 17.
All right. So Martin, I'm a gambling man to an extent. I've got $50,000 now, and I'm willing to let it ride because I believe in what you're saying, that there's only one place to be, and that's the market, and it's going to double. And I want to lever up and take this ride and really watch my money grow, because I agree with you that the collapse is going to happen everywhere else on the planet and last in the U.S. How do I get the biggest bang for my buck on my $50,000?
It's probably going to be equities.
And which equities? Where would I go, in the hypothetical best portfolio to get the biggest bang? Options, whatever it is. How do I get the most money here? How do I get the biggest play?
Well, it effectively probably some of the better equities. Maybe you can leverage them out if you like. I mean, just keep in mind that leveraging. Yes, you can do pretty well with it, but they also want a lot in interest. A lot of these brokerage houses are not like it used to be. 15 years ago. Even.
Yeah.
So you got to be a lot more careful.
Mm-hmm.
Equities are going to go up. If you want to leverage it, you're going to have to stay in a brokerage house. If you want to be really conservative about it, you just say, I want to take delivery and take physical delivery of the stock certificates. And then it's out of the system. Otherwise, you do run the risk of another MF Global.
Yeah, that could happen anytime, couldn't it?
Yes, and you have to realize that, it was supposedly illegal to take client money.
Yeah.
But
they did it
the
anyway.
Judges say, "Oh, it's okay. We'd rather do that than hurt any of our bankers here in New York City." So,
got to take care of the bankers, right? They write our paychecks one way or the other.
Pretty much, they do own New York, and they own the politicians.
Hey, and that's an interesting thing that you bring up, because that's what I've said, and that's why we're never going to have another David Dinkins in New York City, which is why this whole crazy New York City mayoral campaign is shaping up exactly the way it is now. Why Spitzer was there and why Anthony Weiner was there as not just comic relief for the newspaper writers and the late night comedians, but they were there to sabotage the Democratic hopefuls to get this guy Joe Lhota into the right position, to position him to become the next mayor. Interesting, though, the way these things work. So if you've got an appetite for leverage, this is the time where everyone else is freaking out and saying it's going to collapse. So we're going to have a pullback at some point in the not too distant future, though, aren't we?
Yes, I think our major resistance on the Dow is at 16,000.
Right.
So it's not going to break out until you get through that area, at least.
Right.
We may get a pullback going into September. And at that point in time, I would be looking to basically buy the dips at this stage. But as far as it really taking off, I wouldn't consider that until we really get through about 16,200 or so.
Right. So you got an opportunity now, and I'm looking at this from a standpoint. Look, I believe that in the final analysis, I think this thing's going to crumble, but you got some opportunity to play, and you've got, this thing's going to take a while to play out before the U.S., which is going to be the last man standing, which is the last man standing. You see it. I can't believe it. I personally, Martin, never thought it was going to play this way. I thought we were all going to go down together, but somehow, the economic research, there's a guy, Bob Hoy, who's gone back to the tulip mania craze in the 1600s in Holland, and this is what he says, that the reserve currency always is the last one to fall. I mean, it just works that way. It just does. And I can't argue against history. And, there's a psychological component to the whole way that these things unfold. And it's working that way this time. As shocked as I am, people panic and they just go to safety. And, it's just like when you're freaked out, you go heat up a thing of macaroni and cheese because that made you feel good when you were a kid. It's just the way it works.
Yeah, there is no... I know a lot of people like the conspiracy theories and they're there. Honestly,
they're there, but
there is no major long-term idea or plan or somebody controlling stuff. They may attempt to pull off certain manipulations, but there's no systemic issue because nobody, these people don't think that far ahead, and it's all more or less one step forward at a time. It's like, what do I ever have to do to win today? And you say, well, gee, what about 20 years from now? Oh, I'm not going to be here, so why should I care?
I know a lot of these Wall Street guys, and I used to think they were geniuses, Martin, until the subprime bust. And the guys I was riding the train with to New York City, who were making, hundreds of times more money than I was, all they were doing was taking these crappy mortgages and putting them into securities and selling them to stupid pension fund managers in Finland and Sweden and making the vig on that. And, I thought they were geniuses. And when I found out that's how they were getting rich, I got to tell you, it really burst my bubble. They weren't like you, who came up with like a better algorithm and figured this thing out and tracked these cycles, or, like other people who I knew who were master traders who could make that edge. Most of them were just selling these bonds and didn't really understand that these things were toxic. All they knew was they put the thing together and they sold it, and they made millions of dollars every year. And I can't tell you the letdown that I felt when I found out that that's what they were doing. I mean, it
is so superficial.
Mm-hmm.
I have seen the same thing happen every time.
Yeah.
All right. And go back to Orange County.
Yeah. Yep.
Merrill Lynch got sued for a few $1 billion. Merrill Lynch was out basically pitching that scheme to trust funds of universities.
Mm-hmm.
Now, I advised Temple University in Philadelphia. And the chairman there was Dick Fox at the time, and he says, listen, he says, you call Marty, and if he says, yes, then we'll do it.
Mm-hmm.
These two young guys flew in from Chicago. I looked at it, and I said, guys, if interest rates tick up, 0.1%, you're wiped out. They flew back to Chicago. They came back.
Yeah.
No, they reworked their model, and they said, see, if interest rates go up, we break even. The assumption is you can always get out the market, and there's an orderly market. They have no concept of even how markets trade. And I told them, I said, I'm sorry, I cannot recommend this. This is the trust funds of the university. You will wipe it out. They went back to Dick and told him that I was too old, that I didn't know the new way to make money. Yeah. And Dick, who was about 15 years older than me, he said, well, if he's too old, then I'm really ancient.
Yeah. And
they blew up Orange County with this stuff, and it's always the same scheme.
Yeah.
And it's just the instruments change. That's all.
Yeah. Yeah. The instruments, the implements of destruction change, but it's always the attitude and the greed that gets you there. On that note, Martin, we got to get going, but it's Armstrong Economics. So the headline is going to be market to double within 2 years. And I totally believe that that's probably what's going to happen, because it just seems like the groundwork is laid. And by all accounts, this thing should have blown up 2 years ago, but for the fact that, like you said, when we had the Liberty Mastermind symposium, that when we should have had inflation when they started this bond buyback, but they're buying back the bonds of China. China has the cash, and they're not coming in here buying cars and buying stuff. They're buying stocks and securities. So effectively, the money's been sterilized. It hasn't gone into the pockets of the common man, and therefore we haven't had the inflation, although we've had it on the commodity side to some extent, and in real estate as well. So it's a global economy. Yeah,
and we have to start looking at everything from an international perspective. The old theories are gone.
Yeah,
because it's no longer an isolated fishbowl type economy. That's it.
That's for sure. All right, Martin. Go to financialsurvivalnetwork.com, sign up for the newsletter, listen to Martin's other interviews. They're all incisive and definitely against the grain, and will get you thinking in ways that you haven't before, and that's what you need to be doing in the new economy. Martin, we'll talk with you again soon. Thanks so much.
Thanks a lot.
I know we've got a lot of you out there who are coffee fiends just like me. You couldn't go one day without your Java. But here's my question. Why do you drink so much marginal coffee? You know, that watery stuff you get in some places? There's another life, friends, where coffee is good, right, and true. Our friends at Tonks buy your beans directly from the growers, roast it to absolute perfection, and ship it to you within 24 hours. It's a bi-weekly subscription which sends the best beans on earth directly to your doorstep for the price of just a few cafe visits. They'd love to send you a free sample so you can see what you've been missing out on. Use the URL tonks.org/liberty. That's TONX.org/liberty. They'll send you a free sample, and I'll tell you, once you've tasted their coffee, there's no going back.
The Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.